into to pick the 3 days that are or the peak of it, the kill zone where you take the trades. So I'll be breaking down this so that you know, and let me give a chance to my friends also to introduce themselves.
Hello guys, I am Jafred Liane, and today I'll be joining my friend here as we go through the financial market analysis, basically in general. Yeah, and I guess I'll give my friend here to introduce himself too.
Yes, Gerald.
Yes, you're talking to Iceman here. Welcome to podcast.
So generally, I would like my friends to also just ask me some few questions of generally, okay, some changing in the programs. I will have to do it first so that the questions comes after, because I I also have to share with you guys so that you can be able to come up with the questions. So this Quick Up to Connect, and as you know, we have been taking you through the weekly commentaries, the live sessions, and the episodes on our YouTube channel and on our social media platforms. And today I would like to do a weekly candlestick, because I've been doing 4 candlesticks for a while now. So these are weekly candlestick. The red lines, the delineations over here, the red lines are the weekly openings. The weekly opened at exactly 18, our 18. On a Sunday, that's when the week opened at 00, and you delineate the horizontal line also to show you how prices are reacting on the weekly opening and off the weekly opening. So just when the week opens, you mark your own charts and watch out for either buy side, the premium side of the market and the discount side of the market. A Fibonacci tool will help you to do that. So there was buy side liquidity just resting above our weekly opening. So buy side liquidity, those are buy stops, and as you know, after seeking buy side liquidity, the market oftenly goes for discount arrays. You understand? So I just want to take you slowly so that you can understand the market psychology and how these candlesticks react on certain market places. So the weekly candlestick opened here, and you have to understand the power of 3 formation is formed to punish the people in the marketplace, because as you can see evidently here, after the week opened, we went and took buy side liquidity. So the money is here. You can generally say this is where the money is, but retail traders normally do focus on taking the buys when the market has already started going. So they end up being chopped off, and they end up not making money at all. So buy side liquidity has been taken, and you have to know the week has got how many days. The week has got 7 days. 7 days. So if a week has got 7 days, you cannot place your whole career on one day trying to make all kinds of money on a single day. You have to be patient and wait for the market to present a more logic presentation pattern, or a more logic idea on how we are going to make money. Sorry for the interruption. So the week opened on Sunday, and as I've told you, these synthetic indices, they run 24/7 from Sunday to Sunday. There is no time the market will stop running. The market is running forever and all time. So the red line, a small line that I've delineated here, this is on 22nd. The best day to trade a weekly range is on Wednesday or Thursday. Those are the best days. all of the forever. You don't have to be on the market on a daily basis so that you can be able to see these things, because the markets are highly volatile and they can fluctuate anyhowly, you see. So for you to be able to manage your emotions while trading, to manage yourself while trading, then you'll have to set aside a minimum of 2 days per week of trading, of doing the business. If you are trading the weekly candlestick, I'm talking about the swing traders. I normally do day trading because I normally trade the 4 candlesticks expansions, but here we are talking about an hourly, a weekly expansion. So basically, I now want to take you through what happened here, what to do, what the market does before making money. It's very, very tricky, and this is where people lose a lot of money. They end up being frustrated, and they now start calling forex a scam. That's where, because you don't have to be in all these movements. You don't have to be in all these movements, taking here and trying to make it. No, you have to know that these are weekly candlesticks. We have taken buy-side liquidity, and we are forming a sell model over here, and this will be forming on your candlesticks on a weekly basis. It's not that it's just happening now and it stops. The psychology is just the same. So I think I will drop down to a minute 15 time frame so that we can just see what happened and what time it happened, because time is very important on getting these setups. If the setups are not happening on your kill zone, if the setup are not happening and respecting your levels, then that means maybe your model or system is just failing, and you will have to get out of the marketplace before it whips you hard enough. So let's go to the 15 minutes time frame. So these are 15 minutes time frame, and I think I'll just have to. This is the last time frame we'll be analyzing. I want to just make it clear for you guys so that if you have any questions, just reserve them. I think I've got only 3 minutes remaining. I'm just marking the charts out. These things are tiresome, and for you to do them consistently, or rather just trying to do them, you must be a patient man or woman. So these are perfect example if you are intraday trading. Some people cannot wait for all those expansions, because as you can see, we are now on a 15 minutes time frame, and the candlesticks are still looking big. They're not looking they're not small. So here is buy side liquidity. Here is buy side liquidity. Buy side. Buy side liquidity. Then we have got sell side liquidity down here. Those are your targets. This is sell liquidity. So if you are trading a weekly candlestick, or if you are on a 5 minute time frame, you are not seeing the weekly openings. You are not seeing it. So if you just started your analysis from a 15 minute time frame, then you could have missed now the weekly opening, and you start making your own decisions, not knowing where the week opened, and it becomes very difficult for you to make sound decisions on there. So the week opened down here, the lines being not shown. This is on a 15 minute time frame, and the red line I've shown here is the 22nd opening. Let us see which day was that. the 22nd. It was on Thursday. And I told you earlier, Wednesdays and Thursday are the good times to trade the weekly candlesticks. So I'm just going to take you through what happened here because of time. So buy side liquidity was taken. There was an initial run higher, lower. I took this trade, by the way. This is a trade I took, and it get a profit of 59.26 US dollars, and I took it based on time. This was just a minute trade out of the big meat that we are talking about. So I took this trade. There was buy side liquidity that was taken here, and the target was my sell side liquidity. The things that are happening on these lower time frames, as you can see, we took buy side liquidity, we went for sell side. We took buy side liquidity, we ran sell side. Then we took buy side liquidity, and then we are running sell side. And the bigger thing is telling you that we have taken buy side again. So that means we are going for sell side. So everything should just align like that for you to be able to find these setups on a consistent basis. And it's very difficult for a sell man to sell it. It's very, very difficult for a person who has not experienced these things on his own charts for a while to sell. It's very, very difficult. So the candles are big enough. There is no person who can sell there. Like for example here, this is where we are supposed to sell for this model. This is our ideal sell place for us, and selling here requires a lot of balls to do it, and it requires a lot of experience, because you can just see how the candlesticks are big. They're just looking big as they are moving higher. So it becomes very difficult for a person who does not know what time are we. Because let me just try and mark out the times for you so that I can show you the logic behind the formation of that candle. Because as you go down, as you go to the 15-minute time frame, you are now looking for expansions of maybe 4-hour candlesticks, 6-hour candlesticks. That's what you are looking for. If you go to a 1-hour time frame, you are looking for maybe a week, 1 week candlestick, like something like that. So the more you are dropping down to lower time frame, your thoughts should also drop down. So at Sanbili, it's where our kill zone opens. That's where our kill zone opens. That's an 4-hour candlestick opening. And as you know, this is on 22nd, and our day opened here. Let me just mark this one and take our day. This is Thursday open. Our day opened here. And as I told you earlier, the candlesticks are basically opening, forming a high, and expanding, or opening, forming a low, and expanding to the upwards. That's what the candlesticks are doing. All of them, even the 1-minute candlestick. So, for example, here is on a 15-minute time frame, and the day opened here. It opened here, as I've shown you. What did it do? It ran buy side liquidity, mitigated the fair value gap, ran sell side liquidity again. So the market is just fluctuating, and if you don't know these points, the points that are marked, if you don't know the daily opened here and we ran buy side liquidity and what time our kill zone should be, you get confused. This is a market structure shift. Let me just mark it here. You know, these things are very, very difficult, and also hata kuelezea mtu inaweza kuwa vigumu pia. So these are market structure shift. These are market structure shift that happened here. So the day opened, ran cap, small buy side liquidity here. I hope you can see this swing high. There's a swing high here. This one. These are buy side liquidity that was taken in the morning, and it left and created a market structure shift. So the market is weak generally. So you should be very happy when prices start moving upwards, because you just know you sell on the premium side of the premium side is here. This is your range now. You now want to mark the projections. These are model. So there's a Fibonacci retracement tool, and it's going to help us to project our risk and our targets, our objectives. So let me just show you how to measure the risk. The risk is measured by measuring the 0 to 25% of our dealing range of 0.25 is here. I think it's here. So the 0.25 of it, that's the risk they will be. This is the money you'll use to find out if your trade will work out. So if the stop loss gets hit, then that means it has really helped you. You have not lost. So that's the mentality. I'm just trying to show you the mentality when you are in the marketplace. It's not it's not about winning and losing. It's about following your system religiously. Also, you have to follow it on a religious way. So this is a stop loss. I will just have to write it there. Kindly, the time is not on my side. It's only that I want you to understand stop loss. So that's where the stop loss should have been placed. And at Sambili, remember, when you're in the marketplace, we are here to punish people. We are here to make money. You see, so you have to think. You don't have to be human when you are in the marketplace here, because you can lose a lot of money when you fear. So it's very difficult. It's very difficult for you because you are selling above 50% of this dealing range of ours. The dealing range is from here to here. It broke the structure to the downside. This is also a market shift. So these small things, there are the things that people don't see and they will never tell you. In fact, kupata mtu mwanza kufunza tu hivi utaona ni trick, kwa sababu wase waoneshangi wase hizi vitu mtu wangu. They don't show people. So this was the market shift that happened yesterday. It already, you just see the buy side was taken and our swing low was broken to the downside. So imagine you will have to wait all for this until we sell off. So people don't wait. They just started selling. Once they see this big movement downward, they just start selling. Yes, they are right, but these small fluctuations in price, they can make you lose even $1 million. The small ones, this one here. But if you can just be precise and enter above 50%, so if you entered here above 50%, your stop loss is here. So if it goes like this and it comes back, took out buy side liquidity again, the stop loss is not triggered, so you'll just continue being profitable, just like that. Your first payment target is 161.8 according to our model, because it's a measured thing. So it's 161.8, and our second payment procedure is on the sell side liquidity. And as you can see, just below the sell side liquidity, there is the weekly opening. This red line was the weekly opening that was on the hourly chart. You also pay yourself at the weekly opening because they are highly sensitive places. They do act as resistance and support areas. The daily openings also happens as resistance and support areas. So as you can see, the model went ahead and hit the 423.6 level, and it's still even going even lower. So this model is a perfect example of a system that you can use. You can employ it on a weekly candlestick, this system, because I can show you things. 20 samples of, even 100 samples of something like this happening in the marketplace, because they have got no secret. The candle will always open, form a high, then expand, or open, consolidate, manipulate to the lowest, then expand, or consolidate, manipulate to the downside, to the upwards, then expands. So basically, that's just simply what's happening on the marketplace on a daily basis. I've just stripped it down, the 1 week candlestick, for you to see what I'm showing you here. I just forgot to place the logo. These are brand also we're trying to create, and we also have to be professional, because somebody can easily steal this to try to show people. So we'll have to place it there. So for me, I'm done doing the analysis and explaining to you, because we could have gone even up to the 1 minute time frame, but as we move down, the data also becomes huge. So the more we go down, the data also becomes huge, and it also takes time to really analyze up to the dot, up to where our precise entry and exit points should be placed. So me, I'm done. I will also expect maybe some questions from my audience today, from my friend here, Gerald, and Jeff.